Have you been afraid to invest because of all the recent happenings in the news? I used to be that way. I used to listen to all that noise too, until I discovered some simple strategies that changed everything for me. It began with me doing my own research and becoming my own information broker. Now more than ever before, collecting monthly passive income that transforms my financial future is what matters to me most. And that can happen right now for you as well. No matter your age, how much money you have to start with, or what's happening in the world. Welcome and thanks again for joining me for another episode of Living Each Day on Purpose, where I encourage you to make each day count and embrace your God given potential. I am B.A. Ingram, founder of the Cedar Method, where we help you clarify your vision, align with your calling, and turn your passion into profit for a freedom lifestyle. And in today's broadcast, we're starting a new series on how you can get in on the great wealth transfer by making some strategic moves now for your windfall later. So, if you're joining us for the first time, welcome. If you're here and a returning subscriber, watch it. Thanks for coming back again. Go ahead and share this out. Invite somebody to the broadcast because I'm going to be breaking down some things for you that's going to be very crucial and very important. And I'm not going to get into a lot of the spiritual aspects today, not in this broadcast. I try to keep it short, but I am going to be doing some future ones where I'm going to be diving deep into some of these theologies as well as some of the things that are happening and taking place. So let's get into it and let me break it on down for you. Because many people are sitting back and they're watching to see how things are going to play out financially. There's so much happening and so much taking place, but people are sitting back who don't know, who don't understand, who are not familiar with the transitions that's taking place. So they're just sitting back watching. But by the time they figure it out and figure out what happened, it's going to be too late because it's going to have already happened because it's already in the work. And consistency beats timing the market every time. Trying to wait for things to happen and then jump in is never a good thing. You got to jump in before things begin to kick off so you ride the wave up. Okay? And that's what we're going to be talking about in these next few video lessons. But through the years and through years of research and experience and watching and researching those who are, I would say, major players in the game, I've discovered some consistency in what they do and how they do what they do. And I found out that consistent dividend investing outperforms market timing every time. If you go for the long game and the consistent game, it beats trying to time what's going to happen, when it's going to happen, and all of that. Talk to you in previous videos about how to do compound investing, how to see that compound and watch that, how making consistent and regular investments into the market, how they pay off in the long term, and the insights that have been gained, not just from me, but from others that I've talked to, spoke to, I've followed their research. It has helped thousands of people build a portfolio that pays them every single month or every single quarter. And I'm excited to share this knowledge with you because many people don't have it. And there's a lot of people who may think they understand what's happening and what's taking place in the investment game. And I'm not here to debunk any of that. I'm here to talk to people who want to make strategic moves in their later years in life, whether you're 40, in your late 40s, whether you're in your 50s or 60s or beyond. And yet you want to see your money continue to grow and increase for you over time, at least keeping up with the rate of inflation so that you continue to have money's coming in and you continue to enjoy the lifestyle that you've been accustomed to. So if that's you, I want you to keep watching and keep listening. Because when you understand what is happening and what is taking place, you begin to realize that there are certain moves that have already been made that are now being put in place that are now bringing progress to things that weren't before. And those are always great opportunities. And when you attend one of our VIP workshops, you're going to learn some of these things behind the scenes. But I'm going to share with a few of them with you today. Because when you find companies that have been around for a very long time and you don't see them making major changes and major moves, you ought to pay attention because they are the leaders of the game. They are the people who keep the wheels turning, of commerce turning, so to speak. And when you look for companies that you want to invest in, you want to look for companies, and I look for companies that pay dividends. And that's companies who've agreed to pay a certain percentage of their profits back to their shareholders for owning the share and helping them build and grow their company. And these is called by various names. Some people call them dividend kings, some people call them aristocrats. But these are companies that's been around for a very long time, 50 years or more, and the list is up here. And if you look at this list here, there's companies on this list known as the dividend kings because they just don't pay high yields, they pay consistently and have been paying for 50 years or more. And if you look at this list, it's only one company on here that's brand new, minus him. The other companies on here have at least 50 years or more of paying consistently returns back to their investors. And that's what you want to look at when you're looking at dividend paid stocks. You'll look at the consistency of companies that continue to pay. And as they continue to pay, they also continue to increase. For example, make sure that you find companies that have stocks that have a percentage APY. I'll talk about that in just a moment. A percentage APY is the bottom line on their chart, and it's the bottom line when you read the chart. This is going to let you know how much income you could receive as an investor by investing in these companies. For example, I talked to you about SCHD, which is a dividend equity ETF, and that's a Schwab ETF. And that ETF pays a dividend APY of 3.81%. You see that here, 3.81%. So that 3.81% means they're going to pay you 3.8%, 3.81% of every share that you own in their company. Now, for a lot of people, they're probably kicking the bucket right now to my man, that's too low for me. I can't deal with that. Well, I'm not talking to you if you're an experienced investor. You've been doing this for a while. You know others that are paying higher and paying more and paying better. I'm talking to newbies right now, people just getting started, just getting into the game so that they can get their feet wet and start receiving some dividends. And I want to start them off comfortable, start them off small, start them off affordable so that they can be encouraged to do more. And when you begin building a diversified portfolio, with these companies, passive income from ETFs and REITs, as I've been talking to you about, they are the types of companies that are going to pay you regularly and consistently. You can expect it. And if they have something that happens, most oftentimes if they have to make a price adjustment or correction, it's not that they don't pay, they may pay a little less or they may pay a little more. But remember, building passive income is not just about picking, the winner today. It's about picking the winner for the long haul, for the long term. So instead of just looking at companies that are hot right now, because they may not be hot tomorrow, look at companies that have always been hot, because that is the consistency in the game that you want. And you can use various tools and methods. I've shared some with you. Yahoo Finance, NASDAQ Dividend History website is a great place. Dividend.com is a great place. There's many places where you can do this research. And if you sign up with your brokerage account through Schwab or Fidelity or Vanguard, they also have their own websites where you can look up a lot of this information as well. But ensure that you are picking consistent winners that'll pay consistent dividends either every month or every quarter, and they continue to increase it over time, because that's very important. And why is that important? For example, we looked at this Schwab SCHD ETF. Pull that back up on the board for a minute. If you track its history, you can see over the years it has continued to increase. You see that upward climb? That upward climb on the ladder means that they have continued to increase their dividend payout. And that's what you want to look for. Companies that are paying consistently and they continue to increase their dividend payout over the years. They're just not flat, but they're also inclining, which means they're making more profit, they're making more revenue, so they have more income that they can share back with you and I. I talked to you also about real estate investment trust, or REITs. And I talked to you about the company O. And over the years, this has been one of the better performing REITs out there, and it's been consistent. And they've been so consistent, what has been happening is, as we look at SCHD has its increase, now look at what real estate investment O is. It's invested or divested into multiple companies. And it's amazing. And when you look into some of these companies, the things that they own, Realty Income owns over 15,000 properties, so chances are quite high that if you've ever been to a Home Depot or a Walmart or an Amazon store or something like that, it's probably owned by this REIT. This is just some of the companies that it owns, some of the properties that it owned, and they focused on retail places. They are spread across 1,000 tenants. They have over 1,000 tenants, 15,000 properties at current, and they are growing. And they're in different industries. And as you can see on this chart, there's various industries that are properties that they own. And these are not companies that's going out of business tomorrow, or at least, they haven't said that they are. We know a lot has closed. A lot of companies have downsized and closed. But these have been around for a while, and Realty Income is on that list of dividend kings or dividend aristocrats. And what it allows us to do is when we invest in it, it allows us to compound our wealth over time using the power of compound interest. Because once we buy a share of stock in there, they pay us a dividend, we reinvest that dividend, and so we're able to buy more shares, and we continue that process. And over the years, we become a major shareholder. Now, it doesn't mean that we're going to have billions of shares in the company unless we have billions of dollars to put aside into that, okay? But we could own several thousand shares, several hundred shares, and still do quite okay in dividend income. And so when you look for these companies, you're looking to be able to compound your wealth over time through the power of using the automatic dividend reinvestment system, or what they call DRIP. That is when a dividend payment comes in, instead of you taking it out or withdrawing it, you let it just automatically be redeposited back into that stock, into that company, and you buy more shares the next time. And each time that happens, you own more and more shares. Now, this is not aside from your individual investment that you're putting in there, whatever money you decide to invest monthly or weekly or quarterly. This is just a dividend. You are reinvesting the dividend until you get to a point to where you're ready to start withdrawing that dividend. But in the beginning, you're just reinvesting it. For example, if you look for a moderately priced dividend payout ratio, a payout ratio between 80% or below, somewhere around that. If it's 80% or higher, it could be a warning sign that the company is paying too much of their profits out, and they may not have enough earnings to continue to operate it. So you don't want, a payout too high. But I like the sweet spot. I like sticking around with companies that have a sustainable payout ratio, usually around 60 to 70%. And if we go back to the Schwab ETF, we can see through the Schwab ETF it has a consistency of 60%. It pays out 60% of its profits, which is really great, which means it has room to grow up to 70 or even up to 80. It may not go that far, but it wants to remain comfortable in the sweet spot. So looking for a company that's paying out between 60 and 70% is what you want to look at. And you want to pay attention to that total expense ratio, because that lets you know how much of their profits are paying out. If a company is paying out 90% of its profits, in most cases, if it's not a REIT, then it may be over leveraging itself. And if times get tough or things get difficult, it may not have enough capital to continue operating. Real estate investment trusts are a little different. They are governed by law that they must pay 90% of their profits back. So they only get to operate on 10%, which is quite a bit. You look at mortgages, and when you look at rental rates, and you look at those things in the market, they're not small amounts of money, okay? They're pretty major. And so the biggest opportunities in building wealth, especially now today, it comes when things don't feel safe. It comes when things feel uncertain. With all the uncertainty that's happening and taking place right now, you see dips in the market. If you've been watching it, you hear about, changes in the Dow, changes in the NASDAQ, all of that. But it's not because investors are uncertain about what they want to do. They're just not putting more money into things right now because they're waiting to see, which is a great thing for you and I as an investor. Why? Because it allows us to buy more at a lower rate and at a lower price. And this is why wise investors, thrifty investors, experienced investors don't panic when the market takes a hit, when the market takes a little dip. Because as I've shared with you in previous videos, markets go up, markets go down. It's called fluctuation. It's called volatility. It's just part of the game. But those that get in at the right time ride the wave up when it is down. So think back to the pandemic time. Fear was everywhere. and people wasn't certain about what to do. The market took major dips and major hits. People were panicking and running. Many people stood on the sideline. Many people cashed out, sold. You know, they were afraid to take action. But those who understood what was happening and they know how to play the game, they understand the market, they saw things differently. They saw it as an opportunity to buy when things were low because they know, as market always does, what starts low goes high. It goes down, it goes up. They saw blue chip companies at a discount, so they bought things like Microsoft, they bought things like Amazon, they bought all the big companies up. Why? Because they know those companies are going to come back up again because they continue to what? Make products and provide services that people want, people buy. Even when things were taking a hit, many of us went out and bought new iPhones. Many of us went out and bought new Macs or PCs. We didn't stop because we needed it to operate. We needed it to do business. So these companies know people are going to continue to buy their products. So they're going to come back up. And people who understand that, and people who understand the dividend stock game, they still realize and understand these companies are going to pay out cash flow. And the long-term plays that they make turn fear into fortune. And I don't follow many people in the finance game, but I do follow one. And you may not like a lot of these people that's doing what they're doing, but you must respect them in the game. And I respect many of these players in the game, especially Warren Buffett. And Warren Buffett said this. He said, bad news is an investor's best friend. And if you're not ready for a stock to drop 50%, you shouldn't be investing because you anticipate it's going to drop, but you also anticipate I'm going to buy it again or buy another or buy something else when it is low because it's also going to come back up. And if anybody knows how to win at this game, he does. And this is why I follow him. If he's not panicking, I'm not going to panic. If he's not selling off, I'm not going to sell off. Why? Because he and Berkshire Hathaway have made many a millionaire over the years because they follow his strategies, they follow the game, they buy low, they get out high, and they keep it moving and they repeat the cycle. History has proven time and time again that the ones who move when others are hesitating are the ones who come out on top. And that is exactly what I've broken down for you in my 3-day VIP workshop on this topic. Today is no different. And that's why this dividend investing class that I'm doing is key to preparing you for your retirement, preparing you for your later years in life. I know many of believing folk are talking about the great wealth transfer and how that's going to happen. Well, it's not going to just fall into your lap. You've got to get into the game and get involved if you're going to win at it. While most people wait for the perfect time, the best investors know that the perfect time is when everyone else is too afraid to act, when everyone else is too afraid to move, when everyone else is running for shelter and running for cover. These people rush in, and they rush in at the right times, and they ride the wave up, and they see their profits increase substantially, and they become multi-millionaires on top of what they already have. This is why the rich continue to get richer. Everybody that's getting rich ain't stealing. I've met a lot of wealthy people and they're not stealing, but they're in the market and they're playing the market and they're teaching me how to do the same. Because the strongest companies in the world are trading at a discount right now. And the ones that truly matter, they are paying consistent cash flow through dividends and they will continue to do so no matter what happens or no matter what takes place. The dollar isn't going away tomorrow. The financial market isn't going to crash tomorrow. So why not get in and get what you can while you can? The coming or the calming of the fears that need to happen and take place is that we need to understand how this financial game is played and it is won. And if we don't, even as God's people, we're not going to see what we need to see and should see if we're too afraid to take action. Imagine waking up to a new dividend hitting your account every month, even when the economy is filled with the unknown, the uncertain, and people running for cover. I love waking up and looking at my portfolio. I don't do it every day. I may do it once, twice a month because I may have to do some budget things, make some changes. But I love looking in the account and I'm seeing a dividend here, a dividend there, a dividend there. That lets me know my money is at work for me when I'm sleeping, when I'm playing, when I'm relaxing. You wake up to a notification of, hey, a new deposit hit your account. And I'm always looking because when a deposit hits my account, I get excited because that lets me know I'm just not taking things out. Things are also coming in. Because we do a lot of withdrawals. And if you're looking at your bank account, you see a lot of withdrawals. But if you're only on a fixed income, you only got a certain amount coming in, you may only see one or two deposits. But how about seeing a deposit every week? Several deposits every week, several deposits several times a month, in addition to what you already have. Think about it. You can finally take that great family vacation around the world. You can finally retire from that 9 to 5. You can finally pursue your passion without worrying about where the next paycheck is going to come from. And your financial peace of mind continues to grow and increase. You're not worried about money. You're not worried about finances. You're not worried about the cost of things. And it becomes your reality and not just your dream any longer. This is what I want you to experience. And if you're ready to start putting your money to work for you, then sign up for my Unlock Your Freedom workshop that I've got coming up. And sign up for the VIP class, because the VIP class is where you get to work with me personally. You can take the free workshop and learn a lot of the strategies that I teach here every week. And that's wonderful and that's fine. But you have to go at it alone and try to do it by yourself. But if you join the VIP class, you get to work with me and a community of us as we work together to help you build your dividend income so that you can have consistent income coming in every single week, every single month, every single quarter. And when you do, and you sign up for the VIP, you're going to get my EFT and dividend REIT investment starter guide. And it's packed with starter investments that you can make. It gives you examples of how much money you can invest and how much you can expect to return. We have dividend calculators that help you, project what that's going to be and what that's going to look like for you. And then we work with you one-on-one throughout the process so that you can continue growing your income in and for retirement. So this has been helpful to you today. Like and comment, subscribe, share this video out, and continue to follow me for more wealth building tips and strategies in retirement. And remember, you don't have to live in fear of not having enough money in your retirement. You don't have to. You don't have to wonder where the next dollar is coming from. You can start investing today, wisely, safely, with minimal risk, and confidently, in building a financial future of abundance to where money concerns just go out the window. Let's dive in together. I'm looking forward to working with you on the inside. Until next time, take care. Same time. I'll be back again next week, and I look forward to seeing you again. Take care. God bless, and bye for now.